value from success, growth in discovery. Golden Arrow Resources is a well-funded gold-copper exploration company with proven management and prospective properties in Chile, Argentina, and Paraguay. Golden Arrow trades on the Toronto Venture Exchange, symbol GRG, on Frankfurt, symbol G6A, and the OTCQB, symbol GARWF. For more information, visit us at goldenarrowresources.com or call Sean at 778-686-0135.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is home ownership consultant Ross Kay from the wealthyhomeowner.ca, Canada's authority on home ownership. Welcome back to the show, Ross.
And thanks for having me back, Jim.
Ross, last week the Bank of Montreal issued a report that stated Canadian home prices are 46% higher than U.S. house prices. Doug in Toronto asked, if BMO is saying our homes are almost 50% more expensive than Americans, how can Canadians afford to buy them?
Well, I guess what I could say is, obviously, homes in America are not 50% higher than what they are in Canada. They're not 40% higher than what they are in Canada and the United States. They're not 46% higher as they are in Canada. It was another one of these ludicrous reports issued by an economist. You know, Jim, we're talking about economists who have multiple degrees, who've been in these positions for decades, and they're still coming up with insane analysis like this. And it simply explains where the problem is and why there are no solutions for housing affordability in Canada today. So when you look at that report, Jim, they make a comment that the seasonally adjusted average price of a Canadian home was $617,000 as of December. Long story short, folks, what that means is the average price at the end of the year was about $568,000 in Canada. That's what the year-end average price was. When you take the prices that sold at the houses that sold at the end of the year in Canada, that's how they come up with their $617,000 seasonally adjusted average home price published by the Canadian Real Estate Association. So here we have BMO using CREA data and CREA data or CREA stats, which are now buried in a delivery system called Haber Analytics. So a couple of years back, when CREA understood that it was experiencing a lot of scrutiny for the stats that it was publishing, it decided to use an extra layer of protection called Haber Analytics. So it supplied the data to Haber Analytics for the first time in history and authorized Haber Analytics to release that data to economists and housing analysts around Canada. These economists and housing analysts are clueless to how organized real estate in Canada operates. As a result, you have this number. Then you also have them quoting the U.S. mean home price of just over U.S. $350,000. Okay, they also quote that based on a purchasing power parity number, they're adjusting it. They're going to adjust that U.S. house price up to $420,000 Canadian. Then they use another disclaimer, and they say that even if you just use the exchange rate, that brings the U.S. average price up to $444,000, or 40%. Canada's price is 40% higher than America's. Okay, obviously on the way down, it doesn't work that way. But looking on the way up from America, it's a 40% difference. Now, here's what they're doing, folks. Any skilled housing analyst in Canada knows that you don't compare Canada to the USA at any time in our history. Well, maybe before Confederation, Jim. Certainly for the last 50 years, you compare Canada to the state of California, not the United States of America. And this is why. California has basically the same population as Canada. California has basically the same homeownership rate as Canada. California's major cities are almost identical to the structure of the major cities in Canada. California's average income is basically the same as Canada. The homeownership rate in California is basically the same as Canada. Those are your two starting points. You don't compare Canada to the United States. Canada has no vacant homes in this country. There are not hundreds of thousands of dilapidated homes around Canada that are included in an average price purchased by a national association of realtors in the USA. Canada doesn't have a city like Detroit, where the city is in tatters. There are streets and streets and streets of houses that no one in their right mind would live in. There is not a city in Canada that has that. You can't find that in Vancouver, you can't find that in Toronto, and you can't find that in Montreal. But you can find that in major cities across the USA, driving their average price lower. You don't have trailer homes being counted in the mix. Like, I don't know, Jim. Maybe all those snowbirds who fly down to Florida and Arizona, who own trailer homes, or park models as they're called in the United States. You know the Trailer Park Boys show in Canada, folks? In the United States, that is a common form of housing. It's almost non-existent in Canada today. If you look at California, the comparisons are very, very similar, as they have been for a long time. Any good housing analyst in my local area from Burlington, from 1980 forward, always compared Burlington to the city of San Diego in the United States. Their MLS system itself is the second most advanced MLS system in North America, the first being the Realtors Association of Hamilton-Burlington. They have always been the cutting-edge real estate board in this country. In the United States, that real estate board is San Diego. Now, when you compare Canada, the average price in Canada, to the average price in California, you're going to see California is way more money. And that's before you convert it into Canadian dollars. Your listeners need to understand this, Jim. The median, the middle home in Canada has an asking price of $405,000, below even the number published by BMO. The median asking price for a home in California is $770,000 Canadian, $770. In other words, way more expensive than Canada. Same population, same home ownership, same urban densification. When you look at the densification in the major cities in California, very similar to Canada. People will be shocked at this, Jim. Los Angeles has a per hectare population basically the same as Toronto. Not going to hear that anywhere. So they're comparing apples to bananas instead of apples to apples. Then they go on to, okay, this is our answer, BMO says. We're going to tell the entire world this. Every Canadian home buyer is going to go out there pulling their hair out, thinking how bad they have it, which they still do have it bad, Jim. They're buying in a house price inflation market. The housing bubble is not deflated yet. And they have this answer, 40 to 50% in average home price above Canada versus the United States. So now they got to find reasons why. So then they come up with their answer. Here are their 1, 2, 3, 4, 5 answers. Number one, demographics. In particular, stronger population growth in Canada. And they supply a chart. These guys are clueless. Canada counts its population so reliably that you really can't argue a plus or minus of 1%. In the United States, they are not even remotely close to counting their population. Illegal immigrants in these states alone is staggering. It's estimated in California over 15% of the residents are illegal immigrants. They're not being counted. The numbers that they're quoting were not being counted. You have to believe on this BMO's analytics chart that population growth since the Great Recession has risen in Canada and it's decreased in the United States, which is just an insane comment to make. Yes, our population has gone up. Yes, the new government over the last period, say when Trump was in and when Trudeau has been in, they increased immigration in Canada, and they announced it and they counted it. But in the United States, they didn't. Magically, if you look at the chart BMO gave from 2016 on, the population growth dropped in the States. In other words, what they're actually saying is Trump was successful in driving illegal immigrants out of the United States, which was reflected supposedly in a population count, where they don't count illegal immigrants. In Canada, we count people. That's why the difference in the counting numbers. So that blows the demographics argument out of the water. Low interest rates. Clearly, when you compare two housing markets, you need to compare mortgage lending infrastructures of those two markets. And the mortgage lending infrastructure in the United States is totally different than Canada. But instead, they blame it on being lower interest rates. Well, you know something, folks? You're a first-time buyer in Canada, you have to take a 25-year amortization. In the United States, you can take 30 years. In the United States, you get a 30-year mortgage rate. The mortgage rate is the same for all 30 years. And if you want to renew that mortgage, then you go to a negotiation with the bank on points and spread and blah, 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 blah. In Canada, our mortgages come up for renewal every 5 years. That means since 1990, specifically where supposedly the last population peak in Canada happened, interest rates upon renewal every single time have been lower for Canadian families. Let's blow that one out of the water. Urban population. California and Canada have basically the same urban to rural diversification. Trying to compare the United States against Canada doesn't make sense. We don't have a Louisiana. We don't have a Mississippi. We don't have a Colorado. Alberta is not Colorado. We don't have a Vegas. We don't have New York. New York is a totally different city than any city in Canada, which is why you compare it to California. Home ownership rates. Well, they do mention that those two things are basically the same. What they don't mention is how the lower two income quintiles in the United States were negatively impacted by the Great Recession because they lost their homes. American bankers went in and stole their homes from them, never gave them back, and as a matter of fact, in most cases, or many cases, they rented those homes back to the people and have never put those houses back on the resale market. Oh, why didn't BMO mention that? Tax treatment. Now they're going to try to blame all this on capital gains in Canada. Folks, let me tell you something. The average Canadian homeowner from 1990 till 2020 has not made a single dollar of profit on their home. Every dollar that their home is worth today on an inflation-adjusted basis, the Canadian has put directly into owning that home. If your home is worth $1 million, you have put $1 million of your money into that house on an inflation-adjusted basis. You had ridiculous mortgage rates at the beginning of your term, and now you have little tiny mortgage rates when you no longer have a mortgage. Today's new home buyers have little tiny mortgage rates. Little tiny, tiny, tiny. They're so small it's ridiculous. Of course, Americans get to write off their mortgage interest on their income tax. Big savings. Now, what did BM leave out in this discussion? Well, guess what, folks? It costs the average family of four in the United States upwards of upwards of $10,000 a year for health insurance. Something that the Canadian family doesn't have to pay for. It's included in their taxes. When you want to discuss Canada versus the United States, which is why it's way more responsible to do Canada against California, then you have to look at after-tax income that's available. And we use another metric which we call spendable income. Spendable income is a totally different thing. Spendable income in Canada is substantially higher than it is in the United States. What this means is, if you want to compare Canada to the United States on a home ownership, apples-to-apples comparison, Canada is actually cheaper to own a home than it is in the United States. Not the 40 to 50% higher that the Bank of Montreal came out and made headlines announcing. They have no data to back up what their claims are. I've just fully debunked this report. You can choose to believe what I'm saying or not, but I would encourage you to go look at the data, think about what I've said, and consider, do we have a Detroit in Canada? Is there really a Trailer Park Boys state in this country, province in this country? Do we really get our health care covered in our income tax? We don't have to find a way of paying thousands of dollars a year just to make sure our family is protected. I don't know. Maybe I just made the whole thing up, like BMO did.
We'll have more with Ross Kay right after this.
Value from success. Growth in discovery. Golden Arrow Resources is a well-funded gold-copper exploration company with proven management and prospective properties in Chile, Argentina, and Paraguay. Golden Arrow trades on the Toronto Venture Exchange, symbol GRG, on Frankfurt, symbol G6A, and the OTCQB, symbol GARWF. For more information, visit us at goldenarrowresources.com or call Sean at 778-686-0135.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlin, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Welcome back. We're speaking with Ross Kay. Ross, another tale of the banks telling a different story just in the space of a few months. CIBC's Benjamin Tall was interviewed by Amanda Lang on BNN recently, where he stated the shift to work from home was going to reverse. Beta in Toronto asked, what are we to believe? CIBC and banks for months have been telling us the new reality was we'd be working from home and that would never go back to the way it was before the pandemic. Now, I just heard Benny Tall on TV tell Amanda, now he's forecasting the opposite. How can we make decisions when the bank's own staff can't make up their minds about what's going on?
If you go back and you check Benny Tall's comments over the last 10 years, you're going to find that every single thing that he has said almost never comes true. His answers, the reason he's justifying a change that does take place, almost is never reflective of reality, because he does not have the data to prove it. Yes, he was out, like all the other bank economists, telling everybody that this is the new normal. Everybody is going to wants to work from home. Office vacancies are going to be all over the place. And he pushed his bank's stock price up in the process. He encouraged about an extra, I would say, 60,000 Canadian families to make a decision that they wouldn't normally make. His pontification, his comments, it's like the guy is trusted by all of these reporters. And we're saying, what are you talking about? This is a bank economist who has no knowledge of even how the average price is collected by Korea, let alone has any understanding of studying homeowners and what they do. If you go back in our show, you'll see that we told you this is standard late cycle trading behavior of families. Where in the 90s, the end of the 80s, the early 90s, families moved to the suburbs. We had brand new country subdivisions that were set up specifically for that late trading stage decisions by families. This is the exact same thing we have here. People see a lot of gain in their urban home. They have always had a dream of not living in these close communities. In other words, maybe they want half an acre, and they move out to a country subdivision. Now they want to move from their 20 by 60 foot city lot out into a 50 by 100 and 120 foot lot in a suburban city. This is simply late stage trading patterns of the cycle. We have heard over and over and over again how our economy is going to be transformed by things. That is not human nature. Homeowners tell us that they always revert back to what they are comfortable with. Anyone who believes that employers with office workers are going to trust their workers to work as diligently as home as they did it under their supervision at the office. B, have the tools available to them that they're going to be able to complete their job as proficiently. C, have the IP in place that allows the free sharing of critically sensitive information over the internet between thousands of employees. Clearly just isn't stepping back and questioning the logic in that discussion. On this show, we have told you before, this is simply late trading cycle behavior. It's why the suburbs always explode population growth at the end of a trading cycle. This is exactly the same today as it was in the 90s. Exactly, or the late 80s. Exactly the same. House price velocity is the same. The movement is the same. Now, in this case, there's a little bit of difference because there is a small percentage of the boomers who are able to retire and move totally away. So if you're going to be commenting on that, then you have to have data points in place, which you've had for a long period of time, so you can compare it. So for us, we've always had an association with the largest moving companies in Canada. because they always fought for our business. That means we work with their sales reps. We had worked with them for decades. We have been trusted to give them business over the years. Okay? That turns into today where I can call up the major mover companies and I can find out who's moving from where, what is the reason that they're moving, and many other things like how much the average move is costing, the average distance that the average move is. So this means when people tell me people are all moving to Nova Scotia, I know whether that comment is true or not. I don't listen to the narratives. I demand to see the data. I know that the largest mover, sales rep mover, it booked over $1.4 million worth of moves this year, a record. I know where those moves went. I know where they left from which city. He gets his peers to let us know what's going on. We've known this information now, I guess, since around 1995. Benny Tell doesn't know this. He has to come up with excuses. He sold CIBC mortgage customers on the message, hey, there's a move to the suburbs. Housing prices are going crazy in the suburbs. Move to the suburbs now because things are going to be transformed. The bank made all the profits out of that mortgages. Now that that's done, now they reverse it. Oh no, things are going to go back the way that they were. Things are going to be, not a single reporter in Canada challenges these guys. Where Amanda Lang is one of the most intelligent reporters in the business community that I've seen in the last 20 years. Now, I'm not saying I could judge intelligence of a business reporter. What I'm saying is when I watch all of her analysis over the years, she was critically assessing what was going on. She would ask critical questions. Those questions are no longer asked. When Benny Tell appears on TV, they simply believe what Benny Tell tells them. Hey, the sky is pink today, folks. I guess everybody believes Benny Tell. Benny Tell has told you a story at the start of this pandemic, the middle of this pandemic, and the end of the pandemic. It's been three totally different stories. That's why this listener is so confused. Who do you trust? Hopefully, my answer tells you the type of person you should be seeking to get this information from. I'm assuming I'm not the only one in Canada with this information. It's not like it's rocket science what we do. But that's the information that you need to have to make a rational decision. And I would also tell you, anytime a bank economist is talking, cover about the housing market, cover your ears because they don't know what they're talking about. If they did, there's $10,000 sitting on our website ready for them to collect.
We'll have more with Ross Kay right after this.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlin, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Ross Kay. Ross, in May, CMHC told the Canadian Committee on Finance that the government should prepare for house prices to drop between 9 and 18% by January 1st this year. Meanwhile, Leah from Ottawa asked, the Canadian Real Estate Association says home prices rose 10% since April. Well, who was right again? One says prices up 10%. The other one said they'd be down 18%. Why are so many wrong predictions about house prices going on during the lockdown? And whose numbers can we trust going forward?
Well, you can trust none of the numbers that you read. What I'll tell you is if you look at it from an average purchase price instead of an average selling price or average house price, then you can actually look at the house price metrics. But if you don't, look at it from that viewpoint that they're measuring buyers, not houses, there's no publicly available information that you can trust. Zero. That you can even use. Why was CMHC wrong? Everybody can go back on the CMHC website and they can see see that report. I'm sure it's there. If they pulled it off, because they often now are hiding their reports after the fact when they're proven wrong, you can probably find it in the archives. I believe there is a rule that if a report's published, it's got to be stored in the government archives, which are accessible online. That said, there's enough of those charts that are out there. You probably can Google it. CMHC says house prices drop 9 to 18%. And you probably can click images, you probably can see the chart. I don't know, I haven't checked. I will after today's show. Why was CMHC wrong? I can't express how insane it was from our perspective that CMHC would come out in May and make a claim that house prices were going to drop between 9 and 18% by the end of the year or early in the spring of 2021. I can't express how ludicrous that comment was. If Evan Siddall had simply picked up his phone and called the only person in Canada who ever called CMHC and explained to them that MLS average price is not the average resale price of an existing home in Canada, he could have got an answer. But Mr. Siddall has chosen to Twitter block us, so we can't tweet out to him our analysis of housing markets. And I'm sure as heck not going to send reports over to CMHC. If they had called me, I would have gladly told them before they issued the report never to issue such a stupid report. And here's why. As we have said in the show before, an ocean liner takes so much energy to get moving forward. It is impossible to put the brakes on that ocean liner and have it slow down quickly. It's going to go for miles before it slows down. Remember, you can't reverse the engines in a housing market, in the housing market that is an ocean liner. You can only turn off the power. When you turn off the power, the velocity of that vehicle will continue moving you forward. And it's only in the future where that price negativity is going to be recorded. If you don't know how to measure house price velocity, just like you measure the velocity of an ocean liner, then you would make foolish statements like CMHC made in May. And you would be look like the fool come the end of the year when just the opposite happened. If you had been using the velocity of the housing market to read where house prices were going to go, where house prices are going to be claimed to be going to go by the Canadian Real Estate Association, Internet National Bank, if you were measuring velocity in May, you would have understood that's impossible. If you would have understood how the home trades were structured in May and how those home trades would be structured in the months to follow, you would know that would be impossible. It was impossible for house prices to drop at all. They had to keep going up. That doesn't mean individual houses were going up. It means that the average home buyer was going to be spending more money. They made these comments, and then in July 1st, he cuts the gross debt service ratio for first-time buyers. He drops it from 39% to 30%, 35%. He changes the credit score, minimum credit score required to buy a house, from 600, and he raised it to 680. He gives this report, and then he's so stupid. I'm going to use the word stupid, meaning ignorant to a housing market. Okay, this stupid is not lack of intelligence. It's someone who hasn't taken the time to study something and is ignorant to it. That's how I use the word, because of course you could never use that word with kids, but adults, hey, totally different story. Especially when you're given commentary that impacts the lives of every Canadian family. It was impossible to cut your gross debt service ratio from 39 to 35 and at the same time raise the minimum credit score from 600 to 680 and not cut out a whole bunch of first-time buyers from the market. Oh, Roz, why did condo sales drop off in the summer? Everybody's taken out for the market. How come none of these housing analysts mentioned the July 1st change to the mortgage lending infrastructure? How come none of these so-called experts, any banker, any housing analyst, any real, how come they didn't announce it back then? I mean, this is like basic. This is like 1 + 1 = 2 to a housing analyst, yet they didn't say it. So the result was they come out with this report, which basically is like another one of these world is flat things, Jim. There are laws of physics. There are laws of realty. The laws of realty cannot be changed. A housing market has a certain velocity in a given month. I would argue it has a certain velocity every 2 weeks, but that's for another day. This velocity will dictate where the market is going, how long it will take a market to slow down before even the price start the level of increase starts to decrease. So in other words, if you're looking at an 8% increase, you can be looking way down the road, but with velocity, and you know that there's enough momentum in the market that 8% is going to become 12% before the market starts to go negative. And then even after it goes negative, it's still going to be at 12, 11, 10, 9, 8, 7, 6, 5, 4, 3 in the months ahead before it goes the opposite way. These are the laws of realty. You can't change them. There were over $300 billion of real estate traded in Canada last year on the MLS system. Okay? Think about it, folks. A $300 billion business. You don't get $3 when you put in $1 if your sales mix is balanced. But that's what was happening in the last quarter of 2020. For every $1 that was spent on homes, the average price rose enough to lift the housing stock by $3. In other words, it's fictional. It's false. It's illusion created by the MLS house price pyramid scheme. Mr. Siddell doesn't know how that works. Mr. Siddell believed Greg Klump for years. When he was out in the private sector, he believed Greg Klump. He believed Phil Soper. He believed, I guess, Craig Alexander at RE/MAX. He believes these people. These people can't claim a simple $10,000. Does anyone really believe that all of the RE/MAX agents in Canada, all of the Royal LePage agents in Canada, would not come out and attack us by proving that house prices rise in 31 days? They can't. CMHC doesn't measure house price velocity. CMHC doesn't measure momentum. CMHC doesn't measure the sales mix. CMHC does not measure the sales chain. CMHC does not measure house price illusion. And all HPIs in Canada simply mean is house price illusion. These indices are designed to present the same marketing statement that Korea created in the 1990s. Nothing more, nothing less. That's why CMHC was wrong, and that's why all of the Canadian public is so confused. How can so many so-called intelligent experts that have been entrusted by Canadians to tell them the truth be arrogant enough to communicate falsehoods to them? That I can't answer.
Well, Ross, one of the few jobs you don't need training or a degree in to get is politician, so why should we expect anything from them? And I've posted on Facebook, should an IQ test be part of your qualification to run for office?
I would say IQ probably not, myself, Jim.
Yeah.
But I would say real intelligence, critical thinking. You know, this is probably, Jim, what I have such a big problem with today when I watch what's being reported about housing markets and that. Where has critical thinking gone, Jim? When I was a young guy at school and university, everybody embraced critical thinking. When a prof said something, you were encouraged to argue with the prof and try to prove your point. Now today, it seems like you can't argue with anybody without being stigmatized with some name calling. It appears that the academics, Jim, today, they have such a thin skin that they no longer resemble those great professors that I had when I went to university. Some. I mean, some other guys were, pretty much a waste, but I mean, there were some professors who really challenged you. And, I just don't see that. So, I mean, that's my perspective.
Well, look at all the politicians. As soon as you ask them a tough question, they just walk away because they don't have the answers, even though they promised they would.
Yeah, but where's the reporters today, Jim? I watched
Well, they've all been retired They've all been bought out or told take a hike. I look at News 1130, which is celebrating its 25th anniversary this week. I was one of the originals there. And all of us people, after 15 years of service, were told take a hike. We don't need experienced journalists here. We'll hire kids right out of journalism school. And they're all intimidated by high-powered people who tell them, how dare you ask that question? So they don't ask.
So we watch the Prime Minister stay on national television, refusing to answer questions of the most important economic factor in the since the wars, and he refuses to answer, and the press doesn't drill him down.
Nope.
You know, at least, you know something, here's my perspective, Jim. In the United States, when there's a Republican president, the press goes after them nonstop, relentlessly. So at least when you have a Republican president, they're not going to get away with a half-truth, a falsehood, or a non-answer. The minute a Democrat is elected, they pull back and they quit asking the question. You suffer from this. The same is true from what I see in Canada. Where are the hard questions happening with the Trudeau government at the federal level?
Well, I can tell you what happens with the news conferences. Stephen Harper would allow 5 questions, and then he would pick his 5 favorite lapdogs who would just send out his message and never question it. And I'm sure Trudeau's doing the same thing. He knows the 5 reporters who always love his point of view and aren't going to ask him tough questions. And the ones in the background who want to ask a question, again, he'll say, give me 5 questions. Or they just walk away. They don't take questions from anybody. And we're supposed to take it. And Harvey Oberfeld, when he reported for CTV nationally, Prime Minister Trudeau, the original one, would just walk away from him. So finally, he said, Western Canadians are interested in what your point of view is. And of course, the senior Trudeau was interested in getting votes from Western Canada, where he hardly got any. And so he would finally answer the question. So you have to pose the question with intelligence. And frankly, I don't know who's been training these young journalists, but you have to look at it as a full contact sport. You can't be scared of being hurt. And when you have somebody like Brian Mulrooney used to thunder, how dare you ask that question? Dare to ask it and say, and I dare you to answer it. You have to see, but the backbones have been taken out. And frankly, with all the massive layoffs in the media business, anyone with a backbone has been let go a long time ago. And there are precious few journalists, left. And I have to say there's a difference between a journalist and a reporter. So many people there just take what the government says or some official says and reports it. A journalist will dig in and find out what's behind it. Why did they say that? And why hasn't this happened?
Thank you. I agree. I agree 100%. A reporter is a regurgitator of stats provided to them from someone else, or talking points provided to them from someone else. And a journalist is the one who looks at what's been provided to them and critically assesses what's been given and wants to find out if it's the truth or how much truth is in the statement at all.
And that's why it's scary. The government wants to vet what's said on social media. Well, of course, their news releases are propaganda. They don't tell you what's been missed out and why that news release all of a sudden has different information in it than the same one they put out a month ago. And why do they send out the same news release every 6 months about something that happened 3 years ago? Obviously, a friend of mine who worked for the government said they use the 3D method of communication: defer, deny, deflect.
And let's add another D: disgusting. Right?
Ross,
I mean,
yeah. So anyway, the whole thing comes down to people aren't being questioned when they are questioned. You'll notice now too. You'll see a media outlet said, we asked this person for an interview. They sent this written statement. You can't question a written statement. I would say if you're just going to give us a written statement and we can't question you, we're not accepting that as a response at all. I'll just say you refuse to comment.
There you go.
You have to play tough with these people because they find more ways to weasel out of giving you an answer. And if they say, I'll get back to you with that, make sure you put a note in your file to call them in 3 days or 3 weeks and follow up. And again, a reporter will just say a house is on fire. A journalist will find out why is that house on fire, who is inside, and was there a motive to burn it down if it's suspicious?
Jim, if a single reporter demanded proof from the Canadian Real Estate Association, the Real Estate Board of Greater Vancouver, the Fraser Valley Real Estate Board, the Toronto Regional Real Estate Board, if a single journalist asked for proof, prove to me that house prices changed between December and January, October and November, and prove that they've changed, or we're not going to publish your propaganda, it would be over because no proof exists.
Ross, thank you so much for chatting with us.
Hey, thanks, Jim. I really appreciated that.
Ross loves answering your questions. You can send them to info@housestreet.com or to him at rossk.com, and he'll be glad to answer them. My guest has been homeownership consultant Ross Kay from thewealthyhomeowner.ca. Find us on Twitter at House Street. Our YouTube channel is Talk Digital Network. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HoweStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HoweStreet.com radio is a production of House Street Media Incorporated.